G'day guys, it's Ben and Simon here from Pumped on Property. Welcome to the first Australian property market update for 2025. Pretty excited about this year, man, I'm not going to lie.
We're back and in the new office, in the new setup. I know it looks the same, but our vision looks a lot different to last year as well. So starting off the new year really well.
Now, before we get into this month's market update, I just wanted to share something that I read on the ABC News yesterday, right? And these are some of the predictions for the 2025 Australian housing market. So for Perth, they're saying 14 to 19% positive growth. Brisbane's about 9 to 14%. Darwin's 5 to 8%. Like we started to talk about last year, Darwin's looking cheap. Melbourne at the moment, depending on the way that interest rates end up going, could be as much as -5, all the way to +6% this year. Sydney's about the same, so about -5 to about +6 or 7%. Adelaide's looking amazing again, +8 to +13%. Hobart and Canberra are also, as we've been saying for a while now, at the top of their cycles, but some phenomenal media coming out, which is important for you guys to be able to see now in January. So you're not sort of getting to June, July, or later this year when everyone starts coming through, when those rates begin to drop, and the market's sort of blowing itself up again.
And regardless of where rates go, it's looking like Perth, Brisbane and Adelaide are going to continue performing really well. But Sydney and Melbourne are really just teetering on waiting for those interest rates. And if they stay where they are right now, it's looking like it'll end the year in a minus category. But if they start to drop those interest rates at some point throughout the year, we'll start moving into that positive direction again.
Now, to kick off this month's market update, I wanted to sort of reflect on what happened in 2024 in Australia. So, as we all know, the likes of Melbourne, Canberra, Hobart and Darwin all went down last year. There was a whole bunch of reasons for why these things happened. I think in Melbourne, obviously so many people left the state, and the sentiment down there with land taxes going up and with stamp duty going up sort of threw a lot of investors out of that market. The likes of more like Canberra and Hobart were just because those markets went absolutely ballistic in the last sort of 7 to 10 years. And so they've just hit sort of a bit of an affordability or a bit of a ceiling at the moment. And they're just naturally retracing backwards a little bit after phenomenal years and years and years of growth. Darwin is just still not on anybody's radar. There's nothing significant happening up there at the moment, except for the fact that people earn a fortune and prices are super cheap. So as we move through the next few years of the cycle, I think we'll see Darwin kick off. On the other side though, Brisbane went up about 11.2% in 2024. Perth went absolutely phenomenal, going up by 19.2%. And Adelaide had a cracking year at 13.1% as well. And as Simon was just saying off camera, if nothing happens with interest rates this year, we might see a very, very similar sort of year for those three key markets of Brisbane, Perth and Adelaide doing well, and some of those other markets continuing to soften or even maybe declining.
Now, looking at what's happened over the previous month, we have seen most markets around Australia slightly decline, with Sydney, Melbourne, Canberra, Hobart and Darwin all recording a slight decline in values over the previous month. But when we look at Brisbane, Perth and Adelaide, these three markets have once again increased in value over the previous month. Now, according to CoreLogic, those growth rates have been slowing month on month, so we'll have to see what happens in the first quarter of 2025. But as Ben mentioned at the start of the video, all of these markets are likely to see extremely great annual growth rates this year.
Now, when we look at vacancy rates across Australia, they on average would be considered extremely or chronically undersupplied, with every single capital city in Australia at the moment sitting at 2% or below. But when I really rip into the data, Brisbane, Adelaide, Perth and Hobart are the ones that are chronically undersupplied, as we can see in the table. Now, like I've said previously, when in the past I overlaid about 30 years worth of vacancy rates against 30 years of capital city property prices, I found the markets with the lowest vacancy rates were also the ones that did the best in terms of capital growth short term. So it's interesting to see sort of a long-term data set beginning to impact the short-term outcomes. You know, what's interesting about that is sometimes when you look at 30-year charts, you're not sure if it's going to work again in the future, but it's interesting to see, particularly in Brisbane, Perth and Adelaide, the three markets that are sort of booming at the moment, they're the ones with the lowest vacancy rates. So it's very, very cool to see what's happening.
Then if we take a look at auction clearance rates, we can see that there hasn't been much of a change over the previous month. Nothing really meaningful occurring there at the moment. One thing that we did find super interesting when looking at consumer confidence was it did drop over the previous month. And it's currently sitting at 92.8, which is chronically below the longer term averages and slightly above what we were seeing throughout 2024. Now, a reason for this may be because a lot of people were expecting an interest rate drop from the RBA at the end of last year, but it never actually came through. And that could have been one of the reasons why consumer confidence has dropped, and it may sit around these similar rates until we see the RBA drop those cash rates.
Now, one of the reasons in these updates we're so consistent with looking at the key performance indicators that drive the economy is because what we're trying to do as investors is notice subtle changes before the rest of the market comes on. Now, in terms of some of those big rocks in the economy that are symbols of health and what's going on systemically in the system, the unemployment rate sat at basically the same point at 4%, which is very, very low when we look at longer term averages. Now, in terms of lending rates or who's borrowing the money, again, it was very, very split between owner-occupiers and investors, the same as it has been in previous months. What we're trying to look for in that data is a short-term jump in mums and dads going to buy properties or investors going to buy properties. So we've got a clearer idea of who is rushing into the market. And what I believe will happen once we see these interest rates start to come down is over the course of 25 and 26, we'll see the number of investors going above 40% in Australia again in terms of who is writing the home loans. Now, in terms of rates, as Simon just said, unfortunately, we still haven't seen a change. But what we have seen around the world is the American, the English, the Canadian, the Japanese, and the New Zealand rates begin to come down. Now, I think the reason why Australian rates haven't dropped at the moment is because when you look at the charts, all of these economies around the world almost are still sitting with higher rates than Australia. So I think the government's waiting for our threshold to meet that of the other countries around the world so that we can continue to come down in line with them and it doesn't bust up our currency or the way that we borrow money from around the world.
Now, to wrap things up from a data perspective, we'll look at the listings, which have increased on the total number of listings over the month by 7.6%. So still sitting below the 5-year averages, but it's good to see that listings are slowly but surely increasing. And we can notice that up here in Brisbane as buyers agents, we are seeing more properties come to the market, more supply, which is great because we can negotiate a bit harder. Now, if we look at the other end of the spectrum with the distressed listings, over the previous year, we saw those numbers decrease by a modest 0.4%. But I think this is great news because it means the people that are selling their properties are not doing it under distressed conditions in 2024 compared to 2023, even though people have been dealing with those high interest rates for an extended period of time now.
Now, to wrap up the January market update, this is a book that I read over the Christmas break. You probably can't see that there, but it's called The Secret Wealth Advantage, and it's by an author called Akhil Patel. Basically, this book is phenomenal. So it looks at hundreds of years worth of European and American history in terms of the global real estate cycle. Now, for those of you who haven't checked this out already, I strongly recommend it on your 2025 reading list. The cool thing is you can literally read a couple of pages at a time. And what it does is it walks you through the longer term 18.6 year real estate cycle and how money moves around the world, as well as how you can protect yourself, but also benefit, as it says on the front, from the economy's hidden cycle. Now, this book is the most prescriptive finance book I've ever read in my life. It talks about when to go hard, when to pull back, when you could be in danger of building on sand and completely trashing your financial position, and when it's time to sort of leverage up. But it doesn't just talk about property, it talks about business, commodities, stocks, and a whole bunch of other things. So for me, it was very, very, very good reading. And why I wanted to bring it up is we are now moving into the last couple of years of the real estate cycle. And that is a time of incredible opportunity for investors out there who know how to profit from it. And also a very, very dangerous time for people that don't.
Now, when Akhil wrote this book, he was talking on a very macro global level. And what we've actually done with this information is we've used it to figure out how it impacts our decisions here in Australia. Because at the end of the day, we're Australian property investors and we want to make sure that we're identifying the right markets at the right time with the most upside potential into the short, medium and longer term future.
So when Simon and I actually recently sat down with Akhil, the author of the book, and Phil, who wrote The Secret Life of Real Estate and Banking, we looked at 60 years worth of data. And so we looked at this 18 to 20 year cycle and the last 3 times it's washed through Australia. So basically on the worst severe stage of a cycle in a book like this, we're talking about GFCs and Great Depressions. And then what we normally get is a beautiful run out of those markets. Now, what was important for you and I as Australian investors is when we looked at that 60 years worth of data broken up into the cycle, In the 14 years up after a GFC, Australian property prices in the capital cities around the country went up on average 120%. Now, for those of you thinking, wow, there might be a GFC or a depression coming, there isn't a huge amount to freak about if you're setting yourself up at this stage in the right way. Now, what was interesting when looking at those 4 years down over that 60-year period, or the last 3 cycles, in Sydney and Melbourne, the average properties only actually went down 8%. And in the likes of Brisbane, Perth, and Adelaide, the average property only went down 12%. So it's important to note that it isn't something to go out there and freak about, but it is definitely worth learning. And the reason we're bringing this to you early is just so, like us, you can strategically choose assets. And that's why we're not talking about markets like Hobart or Canberra at the moment that have already gone up 120, 130% in the last 10 years. And we're focusing more on markets like Brisbane or markets like Melbourne that we know from coming out of the GFC to the top of the cycle would normally do about 125% growth. But when Simon and I just went and did a crazy amount of analysis on the Australian market and looked at over 60,000 data points across over 4,222 suburbs around the country, we've found suburbs that in the last 10 years have only done 4, 5, 6% per annum, which are well below where they should be right now. And they're the needles in the haystack that we're helping people buy in Townsville, Brisbane, and Melbourne at the moment. We wish you all the best this year. We're excited to bring you incredible ideas and information, and let's get it. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.